What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go.
Welcome back to another episode of Fund Friday. This is going to be a very nutrient-dense, jam-packed episode with two amazing people. We just had the pleasure of connecting with them once more at our flagship summit event in New York City. The gentleman behind TribeVest here, a cutting-edge fund-to-fund group, VC-backed, the whole nine. This is going to be such an important episode for all you emerging fund managers, you capital raisers, maybe investors who kind of want to know behind the curtain what's going on, and also just from a structural perspective as to how we've been able to scale our business safely and compliantly. But with that said, let's give a warm introduction to Travis Smith and Seth Bradley. How are you both today?
Good, Craig. Good to see you.
Doing great, Craig.
It's been just a few weeks since we were in New York together, which was an awesome event. Glad to be here.
Yeah, well, there's been a lot of great updates to the product that TribeVest is offering since our initial conversation we had. So I would almost even argue, for the better or worse, you can maybe even scrap that episode for future purposes. Don't need to look back because we're going to cover that and then some here today. So I'm absolutely elated and thrilled to talk about that. So let's get right into it. And just to start with, for some context, because we're going to just keep it moving forward here, how did Seth and Travis and the team of TribeVest kind of forge and kind of come together from, this alliance from a business perspective?
Yeah, great. Trav, you want to kick that off, man?
Sure. And look, you can't scrap that first episode because I think it's the first episode.
Yeah.
Like we're in the record books at this time, right?
Yeah.
So, look, me finding Seth and Seth finding me is a big part of our story, no doubt. Really, in early 2023, we had built out the infrastructure and the technology. We'd even been challenged by our clients to build out the back office where we do all the distributions, cap table management, K1s, taxes. But I hadn't quite figured out the fund-to-fund portion of this yet. And good story, met Seth Bradley at a conference in the British Virgin Islands where we were both speaking at the event. Both of our wives were there, and they hit it off, we hit it off, and just had a wonderful, wonderful week and weekend. And that was when Seth kind of really opened my eyes to this opportunity. Seth, how do you remember it? Where how did it go from there?
Yeah, well, funny enough, my pitch or my speaking engagement was on fund to funds. It was teaching the group about fund to funds. What is it? How can you go from basically a passive investor and start a business raising capital, and fund to funds is kind of the next step. And at the same time, the industry was pivoting. There was there were winds of change, so to speak, from the co-GP model, and people were starting to really take the fund to funds model more seriously and take a deeper look at it. And the timing just couldn't be better as Travis was taking his company and trying to make a pivot himself into the syndicator and the fund and the capital raising market. And, originally there was a co-GP type of model that was being thrown around and actually had a good bit of success, Travis, right? Going into earlier that year. And, we just got into some deeper discussions about where the market is and where it's going. And the market was really going to fund to funds. And I said, look, Travis, if you're gonna take this business to the next level, get ahead of the game. Like, this is where it's going. It's going to fund to funds, it's kind of getting away from the co-GP model. So if you're gonna build a product around that market, really should focus in on fund to funds.
Yeah. I mean, I'll just go as well, just to piggyback off that. Timing is so funny there, because I think it was roughly around the summer of 2023 when fund of fund was the biggest buzzword in the industry. What is a fund of fund? How does it work? Why is this the most compliant way? Do I need to do it? What is it? How does it structure? Everything included there. So we're going to unpack that all there, but it sounds like, Travis, you might have had an additional comment.
Well, I was going to say, it truly was right place, right time for Seth and I to meet. You think about leading up to that, it was the BEC 2023, and there was just all these rumblings with some bigger names in our industry that were under an investigation for the co-GP model. And that was really how the industry was working with capital partners at the time, and collectively realized that there's got to be a more compliant, better way. And there I was with 2/3 of the solution, talking to Seth, who represented the last third of the solution. So really was right place, right time, and we're so glad to be partnered together in solving a big problem, big challenge.
Yeah, well, and let's get right into that problem. So the problem of the industry. So how can someone like Lone Star Capital safely, compliantly bring dollars into our deals from outside investors, fund managers, capital allocators, and opportunity? So what is the industry problem, and what are you guys both solving?
Seth, I'll hand it over to you. I think from a big industry problem, I mean, there's just the age-old, you have awesome lead sponsors that are working hard, finding great deals, private deals out there, like Lone Star. And then on the other side, there's over 20 million accredited investors that want the benefits of private investing. They want the benefits that come with real estate. They want cash flow. They want tax advantages. They want the appreciation. All those things that are why real estate's so awesome. They want to invest with these lead sponsors in these deals, but as we know, unless you're kind of in a country club or in the network, it's really hard to access those. So that's the big problem. The big problem is we have great lead sponsors with great deals. And then on the other side, we have awesome accredited investors looking for those deals. Meanwhile, they can't find each other, and they don't know how to access them. And so the industry as a whole, a big conduit to solving that is this capital partner, right? The fund manager. And Seth, I'll turn it over to you, kind of, again, maybe start with how the industry was solving it and what the problem was with that.
Right. Yeah. I mean, I think you framed it correctly. It's access. We know these accredited investors are out there. There's millions, maybe tens of millions out there in the United States that maybe they know it, maybe they don't, but they might want to invest. They need educated. They need access to deals. And on the other side, you've got lead sponsors, you've got fund managers, you've got capital aggregators who want to get access to these folks. And we work on that in our business every single day about how do we reach these accredited investors. And then we all have our own little networks of people that we can raise capital from and that we know and that they know, like, and trust us to be able to place their capital with us. Since the Jobs Act in 2012, which is what enabled us to start going out and soliciting and advertising in the public for deals and raising capital in that manner. And the problem is that everything's been great since then, up until COVID, right? The real estate market has just been going absolutely through the roof. So anybody that decided to jump into the sector during that time had success. I mean, you could just, throw paint in the wall and you're going to have success because the market just really helped us out a lot. Like, you had to make a lot of mistakes operationally for things to go wrong, right? I mean, you really did. You really did. Not Lone Star. Lone Star is awesome, right?
No, you're absolutely right. No, you hit the hammer on the nail there for sure.
Yeah, and it's until COVID hit and we got that little blip, and that was just kind of something that came and went. But now you've seen in the last year and a half or so, the market has slowed down. You've seen capital calls. You've seen, some SEC interactions with folks and trying to see if capital was raised correctly, things like that. Kind of looking into how the market evolved. The market evolved beginning with a co-GP model. Initially the co-GP model was thought to be compliant. And if it executed properly, it is compliant. If you have all people in a group that are raising capital for their own deal, they're all active participants, they're all general partners, they're all executing the business plan and participating in decision making, all good. That's an age-old way to do business, and it's been done for all the time, right? Like you've got capital, you've got people actively participating, and all is good. But just like anything else, us entrepreneurs, we like to go around the edges and try to pick and choose like, oh, well, can we do this or can we do this? Let's push the limits. And unfortunately, the market kind of changed into this thing where we push the limits too far. And we've had 10, 15, 20 co-GPs in an active deal where, really all they're doing is raising capital, right? Like we might try to say on paper that this person's doing that, and this person's doing investor relations, and this person's doing a little bit of underwriting, which all may be true. But at the end of the day, if the SEC comes in and says, let's take a look at your whole business plan with this particular asset and this particular offering and see how you raise capital and who's doing what, and they're going to look under the hood and they're going to be able to figure it out. They're smart people back there. They can figure out what you're doing. They can figure out that, hey, this person raised $200,000 and got 2%, and this person raised $600,000 and got 6%. It's pretty easy to put those pieces together. But like I had mentioned before, the market, kind of went our direction, and there were really happy investors. Nobody was upset. Nobody was suing. Nobody was asking questions. And now since the market has changed, you've seen the capital calls, you've seen the foreclosures, you've seen the investors upset. And now that's what Travis was alluding to earlier, is there were certain folks in the industry that were, getting interviewed by the SEC. I don't think anything ever came of it, but it was enough for people to be like, look, we've still got to raise capital. We've still got to do these deals somehow. What other way is there to do it that's more compliant than this co-GP model that the industry has turned to? And the answer is fund of funds. And it's always been fund of funds. There's people out there that have preached that for years, but it's just a little bit, more nuanced, a little bit more complicated, a little bit more expensive. So people have stayed away from it.
Yeah, so exactly. And thank you so much for painting such a Picasso beautiful picture here pertaining to the why before and why now and kind of the context there. Because I think so many people are missing that why component. So you beautifully explained that. So, but then why is the fund to fund the route to do it in? Because it's pretty similar, right? And fund to funds, to your point, have actually been around for really, not going to say forever, but for a long period of time. So just curious to know, why fund to fund is the solution from a compliance perspective and things of that nature.
Yeah, and we can, and Travis, jump in here whenever you want, but we can kind of go through with each stakeholder, why it's compliant, why they love fund to funds, maybe why they don't. Let's talk about the pluses and the minuses. I think we can start with the lead sponsor. I mean, for the lead sponsor, to me, there's really no downside. And I'd love for somebody to maybe make a counter argument to that. But to me, there's no downside for the lead sponsor themselves, right? The people that are actually operating, buying, executing the business plan, by them creating a level of separation through the fund to funds model and not inviting other folks into their deal to raise capital, they're creating risk mitigation and dissipating liability for themselves, right? And they don't have to worry about bringing people into their business because it's a totally separate offering that the fund manager is going to be putting out there, separate from the actual lead sponsors.
Right. And another reason why the lead sponsors love it, other than it's compliant, creates that separation, is it's way more efficient when you're working with a capital partner and they're the ones that are pulling the fund to fund. They might be bringing in 5, 10, 15, 20 investors into their fund to fund. Well, they can coordinate that from a sales perspective and then also on the ongoing administration, right? It's one line on their cap table. right? So instead of getting 15 smaller checks, you're getting one big check, and it's just way more efficient and way more safer, as Seth had said too.
Yeah, and your listeners are very educated, but just in case there are a few out there that are wondering, I mean, the fund of fund itself is just an LLC. It's just a group of investors. It's somebody managing that, which is the fund manager, and that LLC or that partnership, however you want to structure it legally, is actually just a passive investor for the lead sponsor. It's just going to be a big aggregated passive investor for the lead sponsor. So I just wanted to clarify that.
Yeah, and then let's talk about and there's also been some evolution. I hit on that word to start the conversation. But before, we were partnering, or TriVest was partnering with a couple handful of lead sponsors, but there's been some evolution. So can we talk about how you guys have maybe handpicked and cherry-picked some of the top, first-in-class sponsors, and how it worked kind of before, and now the new product lines rolling out, and how, why fund managers are loving it and should even love it more moving forward?
Absolutely. Yeah, great question and great points here. So, as you mentioned, Craig, when we were initially rolling this out, it made sense for us to cherry pick and go work with the lead sponsors with the best track record, the best reputation. And we're proud to say that, Lone Star is one of our earliest lead sponsor partners. And then since then, really, we had almost a requirement where you had to go through one of our lead sponsor partners, and there's good reason for it. We'll come back to that in a second. But if you're a lead sponsor and looking to do this on different deals, if you're a fund manager and looking to do a fund-to-fund on different deals, working with different lead sponsors, you can absolutely work with TriVest. So you think about the benefits of that, right? What you're able to do is you can control your own brand, right? You get to build your own your company. You're building a business one deal at a time. And from your investor's perspective, instead of them going to one investor portal and then going to another deal that has another investor portal, they can actually all come to one portal as you're using TriVest. So I want to again just point out that fund managers can now absolutely work directly with us. They don't need a lead sponsor. Now, I will tell you this. Think about the benefits, though, you do get when we are partnered with a lead sponsor. And Lone Star is a perfect example of that, right? Lone Star has done the work to say, look, if you're a capital raiser, you get these marketing resources, right? We'll put together a deck that you can configure. We've thought through all the economics for you. So if you're wondering how to communicate the terms and the returns, Lone Star's gone as far as adding it to their underwriting spreadsheet so you can play with the numbers, calculate it, and that's a huge deal, right? And so all these things that a lead sponsor partner of ours like Lone Star does just makes it so much more seamless when we do engage with the fund manager, right? We don't have to go back and kind of figure out, well, where are the economics and how are you, doing, commitments from your investors, all those types of things. So fund manager can absolutely come and work directly with us. It's still way more smooth because we already have the offering docs ready. We already have the calculator ready. We already have marketing materials, right? All those things are reasons why working with one of our lead sponsor partners just makes the experience that much better for you and your investors.
Yeah, and just a little back end for a lot of people who may not be privy to this, but if you are a capital allocator specifically that we're talking about in this situation, who is looking to work with a Lone Star Capital or a group similar to us, your other sponsors, there's just some groups that are just not really built or have the infrastructure in place to really streamline the fund-to-fund process, i.e. and the underwriting model, i.e. it already being kind of baked in there. We've done this before. Some groups are kind of in the old way of doing things. Maybe they only do a couple deals a year. That's totally fine. I'm not saying that's a bad thing, but they might have to create a fund-to-fund breakdown economic setup for the double waterfall there, where everyone gets paid out, the investors get their returns that should be similar to what our investors get, and then the fund manager needs to figure out his compensation for his basically part in the opportunity. So we have that baked in, and we've done this now enough times to know how this is going to look, and actually, as a matter of fact, to go through that process even one step further before we even go to public or live with the opportunity to even start the capital raising. Those numbers are ironed out. Those numbers are in place. You know what's going on. It's not a scramble drill amongst everything else to get your partners going, so on and so forth. When you do partner and work with us, which is a key benefit to do and solve for one of the most important places in the capital raising, equation, which is speed and time. So we kind of shrink that time gap versus other groups wouldn't do that, or the other people that you work with, which is highly crucial. There are a lot more groups now that are tailored to the fund to fund, but not every group is. So that's the exciting thing. And then going back to now being partnered with a fund manager at the fund manager level as much, that's amazing for a multitude of things. Number one, if you're a capital allocator, fund manager, we don't see who your investors are because, as Travis alluded to, it's one check going into our opportunity. So you get the shield and sheltering in that perspective, in that equation there. So that's number one. Number two is we're not going to create the other big problem in the business, I would say, which is portal fatigue. So it's not a big issue. It's not the end all be all. But, if you're, let's say, a big alternative investor guy, right? Guy or gal person. What's going to end up happening? Let's say if you've got 5 to 10 sponsors, you're probably going to have, a bunch of different portals to go into. But if you work with a couple of capital raisers who only use TriVest as your back office, well, that's immensely beneficial because you can just keep your accounts there. So I just want to really highlight those two things. And if you want to expand on that further, please feel free to do so.
Yeah, I'll jump in for sure. I've got to mention again, compliance, right? Like think about, the fund-to-fund model where the fund manager is going to create their own business. They're going to create their own entity that they're going to manage, that they're going to administrate, and they're going to operate. So by doing so, yes, there are more responsibilities. You are running your own business. You are taking accountability for you and your investors and your business. But on the flip side of that is, hey, the old co-GP model, you're getting into bed with all these other co-GPs that you don't even know. They may be an acquaintance off of social media, or you might not even know who they are at all, let alone the lead sponsor. So if one of those folks does something wrong, you guys are all in the same boat. Like you're not just taking care of yourself, but you've got to worry about all the other people that you're in business with. And if they do something wrong, they're going to put your investment and your passive investors in a bad situation.
And let's get to the next idea, which is some of the problems that some people have experienced with a fund of fund that I think you guys are really, really cutting edge on to solve for them. So let's just talk about maybe a couple of the problems, which I think is, the expense. I think there's a lot of misnomers about how expensive it can be, and also what you kind of solve for and how you bundle it and package it together. Because if you're the typical person, that's going to be very expensive, but that's why we love you guys. The administration burden and then also time. So let's just kind of break down those problems there, how you see fit accordingly, and we'll let you take it away again.
Seth, I'll let you jump in because you were saying you were just at a conference in, I think that maybe Raise Masters conference in San Diego, and the conversations you were having with fund managers, once they kind of fully understood what we did and how we did it, it really kind of popped for them. So anyway, I thought since that was fresh, I'd ask you to talk about it.
Yeah, I think people that have any kind of experience raising capital when they hear about all the things that we do and for the amount of money that we do it for, they are absolutely blown away. I think the problem that comes up is that it's a misunderstanding of what we do and what we are. So a lot of folks that don't understand will put us in a category of just being an investor portal. They'll be like, hey, TriVest is like, Cash Flow Portal or like Syndication Pro or InvestNext or one of those. And they just kind of lump us in with them. And we're like, that's the smallest thing that we do. The smallest thing that we do is the investor portal. That's one of the services that we provide, but we provide everything soup to nuts. I mean, from start to finish. I mean, it includes everything that you could possibly imagine. I mean, from getting your EIN letter to setting up your LLC to opening your business banking account to doing your legal documents and setting those up for signatures for your investors and actually onboarding your investors or herding the cats.
I was going to say, you actually get a account manager to help you onboard your investors professionally. And you mentioned herding cats. That's maybe one of the things that we're the best in the world at, is helping herd cats.
Yeah, I think that's
really
something
fun
that definitely gets so much fun. Craig knows about it.
All too well.
Yeah, a lot of work, a lot of reaching out to investors, a lot of questions on, hey, how do we fill out these form fields on these subscription documents, right? Like, where do we sign? How do we fill this out? What does this mean? Those things, they take time, they take effort. It's an administrative burden for you and your company, and we take that off your hands. And then we also badger the passive investors till they actually send the wire, right? Like, a lot of times they get cold feet, and we prompt them to send the wire and actually finish their investment. All the things that an investor relations manager might do, we handle that. Now there's some teamwork involved as well, because they're your passive investors, but we do the heavy lifting on that side. And then even on the back end, we are managing your cap table. So we're setting that up for you on our dashboard and actually making distributions to your passive investors. Now you can log on to your dashboard if you want to and send them out manually when you want, how you want, in what amounts. But if you want us to just take those over pursuant to the terms of your offering documents, we'll handle that as well. Pardon the interruption, but we don't do ads. Instead, know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more.
It's amazing.
And the taxes. Yeah, I think, Craig,
taxes. Can't forget the taxes.
The taxes.
Huge.
K1s. Again, one K1 comes in from Lone Star. We of course, at our core, the banking and the cap table. So we have the ownership percentage. Makes it easy for us and our CPAs to create that K1 for each one of the members. We distribute it. They find it right in their document management on their dashboard. And literally 2 days after we receive the K1, your investors have the K1. So think about that. And I know everybody's going through tax season here. Yesterday was kind of a big day, but it's amazing. It really speaks to the technology that we have, that we can receive the K1 on behalf of the deal and then create those K1s in 2 days and distribute them to the members. I was just going to make one last point, Craig. I think if you think about what we do, if you think about an institutional level group or fund. So I think the way fund managers can think about what we do is we really bring this institutional level setup, legal, administration. So think about a family office, all the organization, all the administration, everything they need to have in place to operate. Well, we bring that down to the individual level. So you can have that institutional level administration and setup as a one-man business. And therefore you can really build a business and a brand. Here's the thing, one deal at a time. You don't have to go invest tens of hundreds of thousands of dollars. You can do this one deal at a time, because TribeVest is in the business of helping you launch a capital raising business efficiently.
Amazing. So let's get into the next two components, which is expense and time. So let's talk about time, and then we'll bring it home for the of course the elephant in the room, which is what is this going to cost me? So let's get into the time factor and how long it takes to set everything up from soup to nuts, from hey, I want to work with the deal to funding and things of that nature.
Seth, you want?
Yeah, I'll jump in. Timing wise, we are industry leading in that as soon as you give us the basic information that we need for your fund of funds. So, just simple stuff like, what do you want to call your LLC? What do you want your preferred return to be? What do you want your profit split to be? Those things that you're going to make some decisions on. As soon as you get those items to us, which is in a simple form that we provide that you fill out and we walk you through that as well, we can have your business banking account and your LLC set up in 2 days. And we'll have you ready to raise capital, meaning we're going to have your legal set up, we're going to have your business bank account open, all those things done within 5 business days. So that's why, we should emphasize what Travis said there, that it's a deal-based decision. I mean, you can come to us with a deal that's already under contract, that maybe the lead sponsor is already raising for, and say, hey, look, I want to raise for this deal, but I've only got a few weeks to go. That's plenty of time for us to jump into action. So it's really tough to do that with, let's say, if you came to me and I have my securities attorney hat on, I would be like, there's no way. We've got to get this going weeks before that. Like, you've got to give us some setup time. With TriVest, we've got it streamlined and efficient to the point where 5 business days, you're raising capital.
That's incredible. And that's just really a big X factor that should make everyone feel comfortable with the process, because, there's situations, just go at a sponsor level here, where, hey, a capital raiser might have not been able to get an allocation to deal because other commitments were there. And guess what? Someone falls up short. Well, now, as you know, as a sponsor, whatever dollar's not coming in, you got to make up for that. So it's kind of a moving target, a kind of moving goalpost in many respects. So it's very nice that 5 days, you're in, you're out, you're ready to go to the next. That is awesome. And then the next thought I have there is a capital allocator. Maybe you were late, you're on vacation, and there's this great deal that maybe your inbox is flooded, and then one really, piqued your interest and you could get the space into it. Well, hey, the deal could be live, but you could have a 5-day window to get your turntable going to raise capital safely and compliantly within this structure and infrastructure.
Yeah, great points. And again, I'll just come back to the benefits of working with some of our lead sponsor partners like Lone Star. So you heard Seth say, hey, as soon as you have all these things in order and you push the TriBit button, we spring into action and you're ready to go, right? Well, you do need to have certain things figured out before you hit that TriBit button. And again, the nice thing of working with a group like Lone Star, amongst many other reasons, is they have really ironed out the program, the fund-to-fund program. So if you're coming through them, you already have those things figured out. You hand them up, we get handed off, or you get handed off to us, and you're pushing that button, and in 5 days, you're ready to onboard investors. It's incredible.
That's amazing. Now, the final thing, what people have been waiting for, what does this cost? Because you have to think, for the amazing benefits and the amazing opportunity you get to raise in this time and environment, this has to cost a fortune. Maybe there's a massive upfront cost. I'm not going to get into names, but some groups charge an arm and a leg to get things set up. If you want to do the more boutique, bespoke route where you're doing everything yourself without a name brand in a sense of the setup, you've got to go through the painstaking process of finding a Seth and a Travis and a this and a that to get all your documents ready to go. However, it's pretty cost efficient and effective here. So let's get into that.
I'll let Travis speak to our pricing at TriVest, but I do want to frame it with this. When I worked in big law and, a massive law firm, thousands of attorneys, you would come to our law firm and want to put a fund-to-fund together, or, maybe even a more sophisticated fund. But our prices started at $75,000. I think a lot of people out there in the industry are used to seeing kind of, oh yeah, maybe it costs like $15,000, maybe it costs $12,000, $25,000 on the top end. When you get into the big leagues, $75,000 to start. And that's just your first drafts of your offering documents and then maybe one round of revisions. And then we start charging you $1,000 plus an hour to get across the finish line. And that is just the legal by itself.
And guess what? You may get there and then something could change. A nuance could happen. And guess what? You got to start it all over again or make further revisions and have more billable hours to your incredible attorney like Seth. These people make a lot of money. Okay. So this is a incredible opportunity to be in a very nice spot here where it might be cheaper. And to your point there about that dollar fee, I'm hearing 25 grand from certain services. I'm hearing 75K, 50K to make it do it yourself. And for some people, that's great. That's fine. That fits into their budget. But for, I would say, the most people that are doing this, that probably makes it to a point where you're paying to raise capital. And that's what we're looking to avoid and solve with TribeVest. So with that said, Travis, lead us away.
Absolutely. No, what a great discussion. And I tease Seth all the time about his industry. It's the establishment, right? So we're disrupting the establishment, no doubt about it. And so we just talked about what it would cost kind of going the more traditional routes. Well, we're able to do everything that we just shared with you, the setup, the legal offering docs, the banking, the helping of the onboarding, setting up the cap table, doing the servicing of the filing for you, all that for $5,000. So literally,
can you say that one more time, please?
$5,000. Yes.
Wow.
Only $5,000. And here's the other thing, right? When we talk about having the economics of the fund to fund set up, and again, getting back to the benefits of working with a Lone Star, is they've figured out the terms and even added in all the expenses of TribeVest, right? So that $5,000 is actually included in in the economics. So you don't have to kind of add on additional cost. It's all in there, right? And you can do that with TribeVest because it's contained. There's no creep of cost, right? And I think it's also important to call out how we're able to do this is we have made a very firm box of what we're doing. Of course, we've tailored it to these deals. So everything's in there that you need, including the compliance, including everything we just talked about. But that's how we're able to do this at scale and turnkey and done for you. So it's $5,000 to set up. Now, we can also talk about what's it cost to administer this over 5 years, 6 years, right? Most of these business plans are 5 years before they're exiting. Working with an administrator, administrator, you're talking about $15,000 a year. Well, with TribeVest, it's $2,000 a year. Remember, we're doing all your distributions for you, your cap table management. That includes your K-1s, your taxes. So, anybody that's done this before, they're like, it's more than $2,000 just to do the taxes every year, right? Never mind, you get the portal. Your investors have a dashboard to see all their investments and set up their payout accounts, and they get to see when their distributions are, how many distributions they've had. That's all there, and the distribution. So anyway, it's, I think about, we've mentioned right place, right time, Craig, and we've talked about all those things that kind of lined up for us, but the industry has been trying to figure this out. And we just like to think that we're a small part of it. We're that technology that kind of was the major unlock that kind of opened up the floodgates, if you will. And now our job is to go out there and tell people that this exists. Like, this tool and technology is available for you, and you should build a business on it.
Yeah, I want to make some other kind of comments and points there. So you hear right there. So just to summarize that, it's $5,000. Takes 5 days, and it's roughly $2,000, maybe a little bit more, depending on the number of investors you have and the opportunity. But all that's fine and dandy. But if the product wasn't good, that is where the problem is, and it sucks. And I mean, it sucks to spend money for something to not work well. And people's experience that we've worked with have really liked the infrastructure of the product, what it solves for, because I think I'm someone personally that I am not afraid to spend $1. I'm very good at spending money, but I like to spend money in areas where it's actually worth the money. And I've had very good reviews here from people who have, of course, used the product. So I just want to share that right there. And that's kind of been some of the burden with some of the other products out there as well. You spend a lot of money for the technology to not be great. I mean, Travis has a background with tech. So inherently having that there to have the infrastructure be supported by a good product is the difference between coming back and not coming back. So I just want to tip the cap there to make it not only a good product, but also have people come back to it, but it being cost efficient and effective as well. And then the other time factor that I want to speak on is more from a sales perspective. Being someone that's been in sales by basically my entire career since I was 21, almost a decade of sales in real estate specifically, the last thing that I want to worry about and think about and do is have there be a burden of having, to go through administration stuff, talking to an attorney, doing this, doing that, doing everything that's not shaking hands and legitimately moving the conversation forward and funding dollars into the account. And what TribeVest solves for is a cost-effective route with good technology and done quickly where you don't have to think about any admin stuff. I want to connect with people. I want to talk with people. I want to grow the relationships and raise the capital. I do not want to deal with this in your view of the peripheral stuff. And I'm sure you guys can appreciate that sentiment. And also I've had people say similar things as well.
It means a ton to hear you say that. Of course, we're building our business on fund managers coming back and building their business on our platform. So, it's funny as the founder and always improving and growing the business and our solution, we're never satisfied, and we always think we're disappointing in terms of the experience, and we can be doing this better, and we can, right, and we will. But when we get feedback and we do net promoter scores and get the feedback back from the fund managers, and we get 7+, would you recommend this to friends and family, and would you come back? And that's just a super high rating if anybody's familiar with it. And we're proud of that, but we are just getting started. I mean, we are just getting started. So I think we nailed the fact that we bring a ton of value. You're getting a good value, but now we're going to really wow you and your investors. That's our goal. And we're going to keep pushing.
Yeah. So let's talk into maybe just the mission as the why, why you guys are so passionate about this and want to create this product, because you both are really smart guys. You're very successful prior to this endeavor and venture. So, why is this your mission in your day to day right now? Because you have the option of working. So, and doing really what you want to do. So let's talk about that maybe.
Hey, that's Travis. That's you again, buddy. You're the big picture guy. Bring it.
Oh man, no. I think Seth and I. This is personal for both of us, right? My brothers and I wanted to get into real estate. We didn't come from a real estate family. You didn't get it, that education in school, and we did what we've been doing since the beginning, which is you come together with your tribe when you need to figure something out. And that's what we did. And we started a tribe, pulled our capital and started investing together. And it changed our lives, and it changed the trajectory of our family's financial lives. And that's why we're doing it. By doing this, the fund managers, right? They're the heroes in this movie. The fund managers are the heroes in this movie. That's how millions of investors are going to get access to these deals like the wealthy, right? We all know why we love real estate. It appreciates, it's cash flow, there's tax advantages, you name it. There's a reason why the wealthy invest in these private deals and these private real estate deals. Well, most people don't have access to it. the conduit to getting into those deals are the fund managers, are those capital raisers. We're just happy that we're providing a tool for them that makes it easy. But as you can tell, we're passionate about it. Seth, I mean, he was a capital raiser, right? Seth's done a lot. He's an entrepreneur, but he knows how hard it is to be a capital raiser. And maybe you can talk a little bit about what's motivating you, Seth.
Yeah, I mean, just quickly, I took the bigger pockets route, so to speak. Read Rich Dad Poor Dad, started listening to the Bigger Pockets podcast, did a house hacked into a duplex, and then started buying single family properties, fixing flips, and then started investing.
You're a grinder.
Just level by level, right? Started investing passively in deals when I became a little bit more sophisticated. And then I was like, okay, now what? Now I want to be on the active side. And at that point, I really wanted to switch over to not practicing law whatsoever. I was like, screw this. I'm leaving big law. I'm not doing this anymore. I'm only going to invest in real estate. But then kind of along the journey of becoming an active investor and a syndicator and capital raiser, I realized that my highest and best use is actually still as a securities attorney, and I'm pretty good at it. So I've kind of integrated that into my real estate business and used that to join TriVest, which is at the forefront of, I think, perfect timing in this industry, right? Like real estate and legal are two industries that just move extremely slow. They're dinosaurs. They don't want change, and they're resistant to any kind of change, right? So we've got to, as entrepreneurs, even if we're fund managers or passive investors that are looking to diversify our assets or lead sponsors, we're the ones that have to propel this forward and say, hey, we've got technology now behind us. We've got all these different tools and ways to do things. We need to take advantage of that. And at TriVest, we're building that. So like what we are today is going to be completely different than what we are in Q1 2025 and beyond. We are constantly building, taking in feedback from all of our stakeholders and looking to take over the market.
I love it. Well, then let's just real quickly go back into this. We've kind of touched on it, but maybe just more specifically, how you do work with everyone from lead sponsors, fund managers. And I know you're obviously always going to conferences and masterminds. You're very accessible in many respects, but let's just get into, how you work with everyone once more, just to maybe spoon feed everyone a little bit more information.
Yeah, absolutely. So the lead sponsor, we help them form their fund-to-fund program, right? And that's a huge advantage for them that they can offer a turnkey fund-to-fund program to their capital partners, their capital raisers, their fund managers. And we'll actually sit down and talk about all the things that you need to do for that to be successful. How are you going to work with the fund manager? Economics, we talked about that. You got to build in the fund-to-fund economics into your underwriting. How are you going to give them access to the marketing tools? Those types of things. And really, the blueprint is Lone Star. So Lone Star's leading the way, as they do in most things out there, and have built just an awesome fund-to-fund program. And that's why so many fund-to-fund managers are working with them. But, that's how we work with the lead sponsors. And we talked about all the benefits of that. Cool. And then go ahead, Seth, or any questions there, Craig?
No, I think that was really well said. Kind of building at the blueprint that many people don't have, and just how it works and pertains to us. If you are a capital allocator, you kind of have an understanding of the deal functions, and then there's a additional level there of underwriting materials, so you can raise capital, so you understand the ever important what's in it for me conversation. You can assess your opportunity cost between us and other sponsor if you're looking at other deals and whatnot. I'll tell you this right now. I'll say it again and again. We underpromise and overdeliver. That's kind of the mantra that we try to have here. Like everything, we're probably never going to show you the highest returns on projections. We like to beat our deals up as much as possible prior to going live, because it doesn't serve us nor you, the investors, to see what the best case scenario is. We try to make it as modest as possible with our assumptions. So, we have our infrastructure for what the deal looks like from an underwriting perspective, what your theoretical compensation could look like. So things are just very important to think about. We want basically everyone to be at parity. What do I mean by that? Well, if you're a capital raiser looking to raise for our deals, we want your investor returns and our investor returns to look very similar. They're going to vary ever so slightly because there's a slight drag, for the fees associated to the deal. What do I mean by that? Well, there's the administration fees that could be about $2,000. So sometimes that comes by way of affecting the cash on cash return minusculely from a couple, basis points, I would say roughly about what it looks like. But you'll make it on the back end for the lift and raise of the deal there when the deal goes to sell. So it's never going to be 100% similar because there's some, technical nuances there, but it is to be fair to everyone there. And then you'll be getting, a nice return on the deal that you raised for as well, should there be profit split above the preferred return. So I just think that's a really important thing to hit on as to how that fundamentally works. Now let's get into Seth with you over there on fund managers.
Yeah, fund managers, we kind of touched on it already, but we've changed our business, so we're ready to work with fund managers directly. You can reach out to us and have an exploratory call if you want, but really when you have a deal or you have a lead sponsor that you're ready to work with, that's really when we can spring into action. Make that introduction, reach out to us, make the introduction to the lead sponsor. We can start going to work. And again, we can have you, once we have the information and the things that we need from all the stakeholders, we can have you up and running in 5 days. And, I'll just go ahead and talk about the passive investors too, because they are really important, maybe the most important. I know a lot of those folks are listening right now, and just know that that's always on our roadmap, to make the passive investors happy, to make that user experience awesome and streamlined, and just an awesome experience for that passive investor, because ultimately that's who we're serving. We're trying to reach the passive investors, let them get their money moving, and so they can create multiple streams of income. And we want to make that experience awesome for them, because if they're happy, then the fund managers are happy and the lead sponsors are happy too.
Yeah, there's two things that this show is about. It's about for this particular episode, two things. It is the fund manager to be safely raising money in an ever-changing business. And it is all about, at the end of the day, the investor. The investor is the straw that stirs the drink. They are the king of the beach, so to speak. They're the ones that this is all about, for us to be able to give people who may not know that they can invest in those beautiful commercial real estate buildings that we drive by all the time. It's sad to think that, that's not in the hands of Main Street, so to speak. A $50,000 investment gives you access to that product type. Now, I'm not saying that's where every dollar should be. You should have money probably in the stock market, maybe. You should have some money in your primary residence. Maybe you don't believe that mantra, but you should have also some money in these institutional grade assets. And that's what we're delivering here. And it's so fun to be in a conversation with you both, because you guys really are creating and are the future. So it's cool to be in the moment, to be having the conversation now, but to be also progressing accordingly with you all moving forward.
We just appreciate the partnership. There's a reason why when we were cherry picking our initial lead sponsors that we started to work with Lone Star, and couldn't tell you how much we appreciate this partnership, and like you, looking forward to what's to come in the future here.
Yeah, well, with that said, we could talk forever, but we got to wrap it up at some point. So let's do that now. Travis and Seth, thank you so much for giving us so much of your time here, being generous. How can people reach out with you, want to learn more, with maybe partnering at a sponsor level, investor level, and or a fund manager level?
Absolutely. LinkedIn is always the best place to kind of find me and follow me. Let me know you heard me on this show. I'd love to connect with you. And then you can email me, and we'll also have a link on the show notes here if that's okay.
Yeah, of course.
You can check out tribevest.com, obviously. And then for me, you can find me all over any social media platform. So feel free to reach out.
Excellent. Well, gentlemen, thank you so much for your time today. For those listening, I hope you enjoyed this informative conversation about how the industry is moving and grooving and ever changing. So we'll see you next week. Everyone have a great rest of your day. Peace.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.